Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 8th of October, 2022, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the second week of October. And you will see that the Euro and the Pound seems to be moving in a similar pattern, except for the Aussie, which has been contained in a smaller range until a week close for the week, which we'll see later on and compare with the US dollar index, the DXY, where it has an inverted correlation with the Euro and Pound and has recovered as these have retraced lower. We'll see that later. So, but let's begin with the Euro. And this week, key news is going to be from the US with the US CPI this Thursday on inflation, and already last Friday's non-farm payroll report was better than expected, and which analysts perceive that this would mean that inflation is still persisting, and that could fuel the Fed to continue its hawkish rate hikes. And November's meeting, they could consider a 75 basis points hike again for the fourth time in a row. Versus what was originally expected of only just 50 basis points. So the jobs added was slightly better than expected, just above the 250,000 jobs, and 260 versus the 263 versus 250 expected, and unemployment rate was lower than expected as well. So that shows that the economy is still getting heated up, and which could also mean inflation is still high. So which we'll see this coming Thursday. So at the start of the week, the Euro did continue to climb further following the previous week's close, and continue to drive higher right back up into the parity figure of 1, and which the 62 pip retracement is, before pulling back on the Wednesday and then continued lower all the way back into the 138 pip extension again. So that has close weaker for the week. Let's take a look at the weekly time frame, and you'll see that the rejection from that parity figure, pushing it all the way back down below 98 again, and approaching 97. So this week, there could be continued bearish momentum to target the 162. We'll see if it's going to reach 96, and which is also likely, is possible as well, if the US dollar continues to rise and recover higher. So this area of the previous swing low is now going to be critical resistance. We can move this lower, we can move this all the way up here. That's going to be major resistance. So So 162 is again possible interim support and key support right below that as well. We could adjust the fib to this area, and that would mean it could dip lower into the 786, and the swing low is at the 100 fib, but we may not need that low. For now, we can still leave it as it is. With this reversal. Okay. So it closed right at the 138 fib extension, just at the 97.40 area. And 162 is going to be at the 96.60 area. So we'll see how that goes next week. And in comparison, we'll contrast that with the US dollar index, the DXY. And here's the US dollar index. And right from the start of the week, it had fallen lower, weakened down to the 110 area. Expand this here. So from the 112 fell to the 110. That's the key support now at just below this swing high, previous swing high. And before recovering, finding support at the 110, recovering on a Wednesday all the way back up through the rest of the week. And on Wednesday, because of also better than expected US ISM services figures. So that helped to boost the US dollar, and all the way till Friday's jobs report, which was also slightly better than expected. So gave further fuel for the Fed to continue to increase rate at a higher rate of 75 basis points instead of 50 basis points in November. And we'll see on Thursday whether that's also going to be with the CPI figure, whether that's going to stay strong and elevated. So this coming week is going to be a key one as well for with the inflation figures. And we can actually move this to the 110 as clear support. And we'll leave this here for now. The 786 fib, along with the daily 55, and as well as the 109. So that's a critical zone support here. And just at the 138 fib, still going to be interim resistance with the key one right at the 162 fib, along with the 114 round figure. And take a look on the weekly time frame. You can see a strong bullish bounce last week and closing positive and bullish. So that could be a sign of continued bullish momentum. So it could test the resistance zone again. And we'll see if it's going to be a bullish close for next week to continue to drive it higher. That's going to be a key one for CPI figure to see if that's going to help to boost the US dollar further. That would mean more pain for the other major currencies, especially the euro and the pound sterling. And let's switch back over to the other currencies now. Let's move on to the cable. And the overall pound sterling pairs should be moving in a similar fashion as well. And this week, there are a couple of UK news with GDP coming up on Wednesday. So, but the expectation is for zero growth, and we'll see how good or bad that figure, the actual, is going to be. And on Thursday is also exposed to the CPI data. And similar to the euro, it climbed up higher for the first couple of days of the week and ran up into the 115 round figure before falling back lower down to the 138 pip extension, similar to the euro, and just above the 110 round figure. So it did recover from a very bad and a decade, multi-decade low, over 37 years low for the pound, and managed to recover back. That was from below the 105. I think it hit below 104 before climbing back up last week, and then all the way continued the recovery this week. But then it has retraced back lower. So this time we could move the fips and adjust the fips to the latest swing low here and this recent swing high. So we could use this fib retracement areas. And let's move the resistance right at the round figure of you can put an interim one at the 114, but not necessary for now. Let's move this one lower to, that's a major resistance there, where it turn around at the 115. So that's along with the 786 retracement back up here. And the interim support is going to be right here at the 110 and the 50 fib retracement, where it has already hit for the for Friday. Major support, we can move this higher to the 786 or the 21 fib retracement of this move, of this swing move down. So we can use that as the critical support, which is at the 106.60 area. So if we take a look on the weekly time frame, that's a similar rejection of the round figure as well as the euro, and could be further bearish momentum this week to break this support and into the 109. Yes, 108 area. And we'll see if it's going to test the 106.60. All right. So critical week for the pound sterling pairs, and to see whether it's able to find some support and then consolidate. Let's move on to the Aussie dollar. And last week, the RBA did raise interest rate. However, it only raised it by 25 basis points to 2.6% instead of an expected 0.5% increase. So it was, RBA was a bit dovish, and this pull and drag the Aussie dollar lower. That was on Tuesday, and it could not climb back up above the 65 and continued lower further on Thursday, and then a week close on the Friday. So that's a danger sign for the Aussie now. This is going to be an interim resistance. Before that, we could also adjust this to a continuation move. So let's move this to this swing move down, a pullback into the 50 before for the bearish continuation move, and this will likely, and it has already struggled to climb back up above the 138 extension. So that's the barrier there. And now potentially could be targeting the 63 round figure as well as the 200 extension. So that's going to be our key support area. And 64 is going to be our interim resistance. And this area, this zone between the 138 and the 65 is a critical resistance now. We can drop this lower as well. The 66, we can also drop that down lower as well. So the Aussie dollar is in danger of further bearish moves this coming week, and as well as exposure to the US CPI figure on Thursday. So against a stronger US dollar and higher interest rate differential now, that may cause some problems with the Aussie dollar for the near term. All right. So do check out my other videos on spot gold and dollar yen. Have a safe week and a good trading week, and cheers for now.